Hey traders, John Howell here. In this video, I want to give you a bit of an update on, I did a video a couple of days ago called Warning, the next stock market crash is about to start or next leg down or something like that. And I want to give a bit of an update on some things that I've been seeing in the comments in that to give you some more clarity on how the markets work and what's really going on. So before I start, guys, do not place a trade based on what I see in this video. Trading's risky, right? You know that. And it takes you a long time to become a good trader. There's so many areas you need to become a good trader. And so therefore, it's not a matter of luck or hope that you're going to be long-term consistently profitable. You may make money on one or two or three trades by luck, but all I care about is you having consistent success over the next 10, 20 years. That's what it's about, right? So, and that's what I care about. So I say those disclaimers because these videos here to help you become much more a well-rounded trader. Does it make sense? So anyway, guys, my number one top chart reading and trading technique that has made the biggest difference in my trading career. I recorded the free training and the first link in the description. You click on that, go check it out. I guarantee you're going to absolutely love it. And when you watch the free training, you're going to get a lot out of it as well too. So let me move forward here. One of the biggest things that I see that most people really they just don't see the foundational basis of how the markets really work. And it's not a matter of what I think, because some people say, oh, John, well, you're really bearish right now or whatever. And I'm just like, I'm not bullish or bearish. I'm a trader. Simply means if there's a bullish setup on a particular stock and my rules mean it, you better believe I'm going to be taking that one. Do you know what I mean? So when I view, like right now, we're looking at the NASDAQ here, okay? And I'm going to look at the NASDAQ and the Dow Jones and all that sort of stuff, but we'll use the NASDAQ as an example because that's probably the most defined of what I'm about to share with you. So one of the most important things is that not to say if you are trading based on bottoms and tops and so on and so forth, bottoms and tops, there you go. And so one of the things that I really see that a lot of people just don't understand about how the markets or what the markets is how the charts work, i.e. how the markets work. Does that make sense? Now, what I mean by that, and this may sound so simple and so powerful, but it is the foundation on how the markets work. And if you're going against what I'm about to share with you, you're trying to be smarter than the markets. And your ego, that's basically what you're trading with, will always lose out. You may be right 1 time out of 10. But by you going against what I'm about to share with you, it's literally you trying to be smarter than the market. I'm not smarter than the markets, and you're not smarter than the markets. So what am I talking about here? I'm talking about the simple foundations of what really makes the market and how to view what's really going on right now. Remember, this is all about stacking the odds on your side of doing really well. So when we're talking about stacking the odds on your side of doing really well, it's all about understanding how to read what the market is telling you. Now, how do the markets work? Let's talk about this foundational thing, because a lot of people say, well, John, I'm bullish because of the government, or I'm bearish because of this, or I'm bullish because of this. A lot of people are being bullish because of silver, because of whatever. I report this is what's happening and so on and so forth. But when you look at the markets and you really break it down to simple analysis of simple trend analysis, remember, we are in the game of trading the markets, and trading the markets is all about having probability on our side. Now, with that probability, what is that? The probability is just simply, we want to make sure, right? Because please, guys, listen to me. I've been trading the markets now for a long time myself. And one of the worst things that I do, even still to this day from time to time, because I think I'm smarter than the markets. I don't do it as often now because I realize just doing this is just crazy. Is trying to be smarter than the markets. If the market is telling you something right now, right? And that's all we have, right? That's all we have is right now. Now, if markets are telling us something right now, which means, say, for example, if the sells are in control right now, overall, where do you think the most highest probability trades are going to be? On the sell side, right? So whenever we're looking at the markets, we're just using some simple trend analysis and going with the markets. Now, the market could be in an uptrend right now, and then it could be going sideways, and then it could be going through a downtrend. But our job as a trader is to trade what we see, not what we think will happen, hope will happen, or fear will happen, right? Because all of that stuff is just a load of just, it's just like, do you know what I mean? Like it's you're not using present moment of what the market's telling us right now to make an informed decision. Whenever you try to make an informed decision based on what you think, hope, or fear will happen in the markets, I guarantee you right now, 9 times out of 10 or 95% of the time, whatever you think, hope, or fear will happen will never work. I didn't care if you watched a YouTube video and said there's no more silver in the world, there's a shortage, this silver's going to explode. I guarantee you silver's going to go down. It's just everything's opposite, isn't it? Everything is really opposite to the markets. So I bring this video towards you guys because I really want you to understand is that if you are fighting the market, so many people are like, well, this is bullish right now and we're going to make an all-time new high. Really? Now that may happen. Remember, guys, you as a trader, okay, I know people who watch my videos are traders. We are trading for an income, right? Now that doesn't mean that we trade every single day or every single week. I don't. That simply means that we wait for a high quality or high probability time. So if we look at, say, the NASDAQ here, I'm going to squeeze the NASDAQ up here, and I know what I'm about to share with you it sounds so simple. And you know what? I'm going to bring up a, not a watch list, a chart. I'm going to bring up just a blank candlestick chart here for a minute. All right. Now, let me do this here. And what I'm about to share with you is the foundations of what you should be focusing on first. And this is what's called respecting the market, okay? Respecting the market. When you start respecting the market, you start to go with what I call the stream. The stream is, if the stream is going somewhere, then wouldn't it be smart to just go with that stream? So let's have a look at this here, okay? If we have a look at, say, the NASDAQ over the last couple of years, all right, let's just use this as an example here, all right? We look at this for the last 2 years. I'm looking at the NASDAQ chart. All right, bear with me for a minute. Who's in control of this market? Right? Now, if we use that analogy of who's in control, if we start with the foundation of who's in control right now, then we know instantly that if there's someone clearly in control, meaning because there's either buyers in control, meaning the buyers are raising their prices, means the big boys keep raising the prices for whatever reason. The big boys that keep raising their prices. Or there may be no one in control where the big boys are still unsure. Maybe there's profit taking, maybe they're just unsure right now. Or the big boys are clearly selling or lowering their prices for whatever reason, right? Doesn't it make sense that if we see what the big boys are doing right now, because they're the ones that push this market around, not us, doesn't it make sense that if the big boys are thinking and feeling something right now, that we go with that and not try to fight it? What I mean by that is this, is that if we have a look at this bottom bit through over here, okay, we have a low, we have a higher low, breaking through previous highs, as you can see. What does that mean? Buyers are raising their prices, or the big boys, so to speak, are raising their prices. Higher low, higher low, higher low. So who's in control right now? It doesn't matter what we think. It doesn't matter what, well, the market's overvalued. Oh, there's a YouTube video. We're in the biggest debt bubble of all history. We're going to go to war. By the way, guys, if you ever think we're going to go to war, that's actually bullish for the stock market. Do you realize that? Go back in time. And I guarantee you, when you start to realize the last couple of big wars that we've had has actually been the bottom in the markets. Because at that time, I know I'm going off a bit course here, but I'm trying to educate you about everything seems to be opposite in the markets, right? So what I mean by that is that generally what happens with wars, the last couple of big wars we've had, the market's been selling off. uncertainty, war starts, we just go boom, we just go for a big bull. That when the war starts, it seems to be the bottom of the markets. Anyway, so think about that when it comes to that war. So higher low, higher low, higher low, higher low, higher low through here, higher low through here. What do we have here? Equal low. So at this point right now, what was happening through here? Buyers were raising their prices. There's no, the stochastics is giving divergence right now, and the MACD is this, and the volume's doing this, and the YouTube video is doing this, and something yada yada yada, story. No. Remember, trade what you see, not what you think, hope, or fear. What is this here? This is another equal low. Have we started to break down where we're creating lower lows and lower highs yet? No. What's this? A higher low, a higher low, a higher low, a higher low, and what? Another higher low. So throughout this time, who was in control? No. It doesn't matter. Well, John, we're getting towards the top of the market. No one knows that. No one knew that this was going to be the top of the market. And for someone that does YouTube videos saying that they got the top of the market, they've been calling the top of the market for the last 2 years. You guys know what I'm talking about. Like, come on now. No one's that smart. Okay. Now we can get to a point where we know roughly where the top of the market is, and that's based on interest rates, right? Because once interest rates start to get to that equilibrium, we know it's starting to hurt asset prices, and then asset prices pull back. So you can start to see with the interest rates and what's built into the curve, you can start to see when we're sort of getting to a peak in the market, right? Because you can see what's happening there. So that by using that, we can start to see when we're roughly getting towards the peak of the market. Now, that may be when you see the interest rates out of that may be now, or maybe then say 5 or 6 months out. You never know exactly where the top is. So look at that there. So what happens through here? Market ran down and created what? What is this here? This is a lower low. Lower low than this low here. This low here, this low here, this low here, this low here, right? So this is a lower low compared to those lows. So if we're looking at this here right now, forget what you think, hope or fear, forget what, it doesn't matter, all right? Just throw all that story, all those things about what you think about the market, what you hope about the market. Just trade what you see. What's happening right now? This is a lower low. So is this the very first lower low, clear lower low in the markets that we've had for a couple of years? And the answer is yes, right? Now we had one back here, as you can see. We had slightly one back here, but that there, actually, you know what? Actually, that wasn't a lower low. That was a higher low. My bad. That was a higher low. Then it came down, made this is now a lower low through here, and then created a higher low through there. All right. So as you can see, right, but this is really the first clear lower low. Then the market came down, ran up, and then it created a lower high. Then it came down and created a lower low. And then it came down and created a lower high. And then it came down and created a lower low. So if we are looking at the NASDAQ right now, who is in control? Clearly the sellers. It's not a matter of, like right here, we had clear buyers in control, didn't we? Very, very, very clear upward trend. It's a clear trend. Higher highs and higher lows. Then we went through a period of indecision when the market starts to do this. Lower lows, lower highs, and so on and so forth, right? Indecision. Then we started to break out. Higher highs, higher lows. Someone clearly in control. Then we broke down. Lower lows, lower highs. Someone clearly in control. Right? And now, guess what? So if we're looking at the markets right now, who's in control? Not today, not based on today's candle. Who cares about today's candle? Not based on yesterday's candle or the day before. No. As you can see, right, it's based on the overall, what I call the waves or the formation of the markets. So as we can see, right, that we actually have lower lows, lower highs. So right now, this could be another lower high, and we could be getting ready for another drop down. So if you are trading the markets, or you're trading any market out there, and you're starting to see the market give you a clear downtrend, like gold has been doing gold did do since 2011, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And if you're buying that because you think you're smarter than the markets, don't make some excuse around, oh, well, the market was manipulated, or the government did this, or the government did that. It's like, no, you did that. You didn't respect the market. Now remember, respecting the market and who's in control is pretty much is a couple of different things, right? So who's in control right now? The bears. But what does that mean? We are going to get what? We're going to get rallies. When the market runs, we're going to get a drop. And we're going to get a pullback. We get pullbacks. How deep are the pullbacks? Sometimes they're big, maybe 50, 60%, sometimes a bit bigger, so on and so forth, right? So with all of that being said, no matter what market you're looking at, see, whenever I'm looking to trade the market, I'm always trading when someone is clearly in control. If I'm getting a period, like if I squeeze my chart up here for a minute, if I get a period, I like to trade through these times through here. Why? Clear higher lows and higher highs. I don't like to trade through here. Why? Because there's no one in control. So when there's no one in control, you want to stay away from that because there's no probability at all. And then when the market starts to go through another someone clearly in control, that's when I'm more bearish right now because the market is in a clear downward trend.